The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 22nd magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, let's go check out the circumstance of these markets. Let's go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. Of course, you can reach out to me by email, steve@tfnn.com. Make sure you put something big and bold in that heading area. How about like just Trader's Edge, right? Name of the show, or Mastering Probability, my newsletter service. That way I'll be able to make sure that it does not get accidentally deleted. And, of course, inside the Tiger's Den, you can send me a ping. Any ping will do. So let's go ahead and get this show started on Bolero Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 95 points at about 20,900. S&P up 11 at 2392. Russell 2000 up 5 points. That's 0.4%. She's trading at 1372. NDX up 41 points. The semis are up 0.6%. They're trading out at 1067. Mean and green all along the board, with the exception of the volatility index, down 74 cents. It's at 1130. It's going to be headed lower out there. That's going to put some kerosene on the fire to the upside. Market is going to continue moving higher. Could continue moving much, much higher. If you're short, well, just keep using stops out there, because, hey, anything can happen in the very next moment. But as we speak right now, with regard to this moment, the markets are going to move higher. We'll go take a look at some of those reasons why out there. Gold is up $7. That's trading at $12.61. Silver's up 36 cents, trading at $17.16. Leading the chart here, dollar-wise, the upside, you've got Intuitive Surgical, new all-time highs on this, up $22, nearly 3%. Trading out at $8.92. Priceline is up $20. Regeneron Pharmaceuticals, we know that's headed much, much higher. That's a consolidation breakout. It's up $14 today. Nutraceutical, this is a buyout, so we won't have to talk about that. Puma Biotech, that was up big earlier, still up big, 35% or $13. Amazon up $10, about 1%. To the downside, AutoZone leading the charge off nearly $10, 1.5%. National Grid, something or other, is down $6, 8%. Bluebird Bio down 4%. Argon Inc. off $3. Amgen down 3. Chipotle is off $3. So we can take a look at those stocks. Of course, we'll go take a look at Ford, not right this very second, but we'll certainly take a look at that and anything else that you would like. So let's begin with the markets out here. Perhaps the most interesting thing for you to track today, okay, and that way if you're uncertain as to what the markets are going to do, what I'd like to do is provide you with some certainty in an uncertain world. But in the stock markets, we look for different tools. One of those tools here, specifically inside the NDX 100, and you know what it is. You already know what it is. Let's take a look at the equal-weighted ETF for the QQQ series. That is QQEW. Right now, it's trading at 53.32. If it closes anywhere above 53.34, don't let anybody give you jacks, you fill in the blank, about telling them that the NDX 100 is going to go ahead and continue moving higher, because the equal weight, and don't let anybody, and I mean anybody, tell you that it's only 5 stocks that are moving these markets out here. If anything would be proof that that is not the case, it would be the QQEW. because every stock has the exact same equal weighting, therefore EW. Now, on the trading session of May 16th, and right now, you and I, we're just taking a look at closing prices. That's really all we need to know in this case here. Volume, schmolium, it doesn't really matter. Nothing else matters out here other than that closing price. If we close about 53.34, the closing price of May 16th out there, this is telling you massive, substantial, significant health inside of the Qs, the NDX 100. It's not anywhere near, well, I can't say not anywhere near, but it's not threatening its top as we speak right now. Closing high, 139.62. You're at 138.87 out there. So the NDX 100 equal weighted ETF, watch that price point to 53.34. You close above, hey, if you close below it, it doesn't mean that that was a failure. Don't want you to get that message. But with regard to looking for some certainty as to, hey, are these markets going to continue higher here for at least a few more days? That will be one of the big tells. That's like putting that dollar bill up on your head and playing that game of, some people use BS, before Steve, or they call it liar's poker out there. That's the most important chart of the day. Now, there's other important charts out here. We'll go take a look at those. For example, let's go take a look at the 4 futures indices, the equity contracts out here. Now, you do have the ES Mini right up against resistance, potential resistance. I say hogwash out here. It's going higher. Right now, it's trading out at 23.91. And 3 ticks, 23.91.75. At 23.91.75 is the top of its daily box. That's the blue horizontal line on my screen. So it could possibly be that this is where you would start to see the market turn. So we got to always take a look at both sides of the trade out here. But if I look to my right and I take a look at the NQ, and we see that the NQ is trading above the top of its daily box, well, that leads me to believe, and take a look at that NQ chart, that really the ES is going to go ahead and blow through this resistance zone out here. It's going to go and make all new time highs out here. So is the NQ. And guess what? It's going to find a lot of energy coming from the Dow, because the Dow is back inside its box unless there's just a total failure by 4, which it could be out here. What the Dow equity futures want to do is go hit that 21.010. Maybe that's a place for us to take a look at putting shorties on. For what period of time, we don't know. And I said just maybe, because maybe it's not. Now, there was a good question that was posed by Marie inside the Tigers Den just before we came on, saying that, hey, maybe the 30-minute chart for the ES is in the 7th wave move out here. And the way that I take a look at this, Maria, we had a recycle earlier this morning, because in fact, and the reason why she pointed that out is sometimes the market sings in the key of G. This is a Stevie Wonder market out there, and singing in the key of G is good. Sometimes you get up to that 7th wave or letter G on these charts out here, and that's where you can see the market actually make a significant top or bottom. In this case here, it was just really a short-term top. Now, prices are moving higher, doing less relative energy. That's therefore the diagonal lines that you see that are automatically drawn on my charts out here when that happens, similar to the effect down here at the lows last Thursday morning, right? That's Wednesday. Yeah, last Thursday morning, late Thursday night when those were actually forming out here. So wave number 6 as we speak right now after the recycle, that's what I've got it at. And if we get up there and you make a 7th wave and you get a bearish reversal signal, you must see a close below Stevie's red line. That's that oscillator and change line. Otherwise, it just doesn't matter. See Rhodes with TFNN. That's on a 30-minute chart, folks. That's all that is. Hope you're ready. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 95, S&P's up 11. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you doing today? How was your weekend?
It was excellent, and much enjoyed the race on Saturday at 6 o'clock.
Ah, good. Glad to hear it. Hey, we've got a big race coming. We have a big race
to break out a bottle of wine with my wife and watch Seabiscuit and check out Pimlico track back from the 30s.
Oh, wow, okay, that's good. That sounds like a nice Saturday evening. Now, there's another big race coming this weekend. Do you like the Indy races? The Indy 500?
Oh, geez, yes, of course.
Yeah. I turned it on just a bit yesterday. I was kind of in and out and saw those drivers going at like 231 average miles per hour around that track. Man, those cars just haul, do they not?
Say, Steve, I'm calling to ask you a very specific question on the NASDAQ 100 futures.
Sure.
The NQM7 contract fell 175 points off the high last Tuesday, and then it's come right back. I know what conditions I'd be looking for buy setup-wise if we've got another 150 to 200-point rug pull decline. But the question is, if with 56.95 right here, within just 30 points of the high, if NQM, if these futures run up and surpass last Tuesday's record high, 57.25, can you share what your tools would provide as guidance as to how far this rally could extend, just, in the next 1 to 3, 4 weeks, please?
Yep, the number is 58.59. That's the number that you're looking for. We're trading at 56.93, and the way that I come up with that level of 58.59 is it happens to be the next weekly. We're looking at a weekly chart here for the NQ. We're looking at the continuous contract, so I have all the data going back 20 years or so, and that happens to be the top of the next weekly horizontal trading range level. So last week, when the NQ pulled back, let me get the exact price here on it. We'll add up the data window. The actual low last week in the NQ got to 55.50.50. And at 55.46.81, that happened to be the weekly horizontal trading range that it broke through on April 24th. And last week was the first time that price came back and tested what was a level of resistance that now has become a level of support. So odds would favor, if the highs get taken out, then 58.59 would be the number to be looking at.
Can I ask you just specifically on that chart and those numbers,
the
55.46 level,
yes.
was this a number that was on your charts having been previously calculated before the past 2, 3, 4 weeks?
Yes, in fact, we took a look at those numbers as the NQ had passed it 3 weeks ago, 2 or 3 weeks ago. We took a look at the NQ because these numbers were here. They really, that number gets generated, much like your Wheeler 57 numbers. These numbers here, in essence, were really generated. These different horizontal levels, folks, if you're watching this on Tiger TV, were generated back in basically 2011. And once you have those numbers established, each time one level gets broken through, you look for price to eventually move up to that next level. Now, there is a point here on these charts. Let me see if I can just simply put this on the screen, which is just the midway point. And you're going to see that price, that's at 57.02, John. And that midway point, sometimes Bud Rolfs like to call it ice, different forms of ice. What did he have? He had shelf ice. But in any event, this can be a point where a market can turn. But we saw that last week. But we can bounce around between 55.50 and 57.02 for a while. So that's what the numbers show as where price could go to. If that's going to happen, and price is going to get up there, then we can kind of go to some other horizontal pricing levels, those being our TAS levels. Take a look at 62.40 daily and weekly. And as long as price stays above inside the NQ, 56.79, that's the daily TAS market profile, which we're trading above today, then that really offers, that says we're going back to the highs, and then maybe the fulfillment of the price level that you and I just took a look at. So in the NQ out here, it's really above all resistance. It's why I suggested at the open that the most important chart for people to be able to follow along on, because Apple's not doing a lot today, Microsoft isn't doing a ton today, and people might say, oh, that's a sign of a top out here. Hogwash. If the equal-weighted ETF closes above its all-time high, and we take a look at all these things out here, it just communicates to you and I wants higher price. Does that top get fulfilled or not? There's no reason for me to believe that it won't until we see some other kind of reversal signal out there. The other interesting thing, John, I'd share with you with regard to today that I'm watching, and it's really another confirmation, and specifically inside the NQ, that you at least get back to the highs, is the price level of 5,700.23 right now. But I would just say, let's call it 57.01 because the number will fluctuate. That's that red line on my chart. And price has basically made it back to that resistance zone. So the NQ is not totally out of the woods, but it gets out of the woods if it closes above that, because then the bottom portion of my chart, the price oscillator, now the bottom portion, would be rising. It's above zero, and it just doesn't get more bullish than that. Then as Maria and I were looking at on our 30-minute chart out here, I have the NQ having formed a seventh wave back there on, it looks like May 16th was the date, and any close above that, is like a recycle, thanks to Saratoga Bob, if we go ahead and use that basic formula out there. So that's what I see on the NQ charts out there. What say you?
I have nothing intelligent nor insightful to add to that. That is as about as clear and decisive, I think, as can be said. So thank you very much. And I will just tell you, of course, I'm in the Tiger's Den.
Yes. And
Den members can see it, but for your TFNN TV listeners, I will merely say I have just coined the phrase the NASDAQ Rhodes 312. That would be the distance between the PTRs that you've developed. By the way, thank you for reviewing the NDX index with those PTRs going back prior to 2009.
Sure,
As I just look at that charts, that bandwidth really beautifully defines resistance, then support, and what have you. So, terrific.
Yeah, it's so cool. It's really, you're welcome. It's so cool how it works, just like you've experienced on those Wheeler 57s. It's so cool how it works. And you and I, as we watch this laboratory unfold, what it does after years and years and years, you just get so much conviction when you watch price play out in these levels here. So anyways, thanks to you, and have a great day.
Great, Steve. Thanks again.
You
Bye.
bet. That was John in Philly. Right now we've got the Dow. Where is that Dow? Well, looks like it's up 97 points. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Just check the email out here. I don't see any requests out there. So let's continue looking at the markets just for a few more moments out here, just for some other clues, right? So if we take a look at the advanced decline oscillator reading, that's the bottom portion of our charts here, the blue lines that you're looking at. You'll see it for the three indices that we can track: New York Stock Exchange, NASDAQ Composite, and the Dow. You'll see that each of those are above zero. The presumed meaning when those lines are above or below zero, is which side, who's in control of the market, buyers or sellers. Now, just because one side is in control doesn't necessarily mean that that you're all clear, but it's a really great indication. If you're trying to understand the health of the market, it's one of those items on your checklist that you should be aware of. In this case here, says that everything is back above zero, and therefore it is really the buyers that are in control. Now, the bottom right-hand portion of my chart is the S&P, or the right-hand chart out there. I've got a quadrant out here. So the very right quadrant has the S&P at the top and the volatility, the spot volatility index at the bottom. I don't have the data flow, unfortunately, so that I can go ahead and calculate the S&P 500 advanced decline oscillator reading. Actually, don't need to. I mean, I'd like to, but I have a tool that works just as well, or better at least, for helping understand what the S&P 500 is doing. You and I, we did this, right? It was Paul Revere riding through these charts, Stevie's charts out here. It was on Wednesday when we took a look at it, and certainly on Thursday when we came back after that market decline, what we suggested was that the spot volatility index was going to get back into the 10 area. I don't remember the exact price right now. It's 1044 on my chart. If we go ahead and blow that up on our screen, I guess even when I enlarge it, it doesn't really blow it up that well. I can open up this chart here. Give me a moment. I'll open it. It'll make it a little bit easier for you to see. Let me just get down. I got so many charts, but I know I called that one spot VIX, I believe. So let me just find it if I really called it that. SP, come on, where is it? Come on, we're on live show here. I probably called S&P 500 and spot VIX. I got one more way to do this. I'm going to just give me another few seconds out here, and if it pops up, bummer. Okay, so I'm going to have to do it the old-fashioned way. Not that's a big deal. Just mess. I've got to close this to do that. Okay, so we'll put this back up on the screen. I'll just simply move this up, and then you'll see it. Now it's kind of large. Now you can see that little blue line on the bottom of my screen, 1044. You close below 1192 today, and the message is it's going to go down and visit at least 1044, maybe below 1044, but at least 1044 out there. So if the volatility, spot volatility index is falling, of course, it all depends on what's going on in the futures market and so forth. But right now, the call would be that that's another indication that the markets want to go ahead and I can move this all the way up here like this. There we go. The markets want to go ahead and move higher, the S&P 500 specifically. Now, John and I, we were taking a look at the NQ. What's interesting, and we were looking at one of my tools, the oscillator on change line. You can see inside the ES Mini, we're trading above that level right now. And we're not that far over it. Looks like about 2390 is the number. But if you close above that, that's a bullish message. Says that it wants to go to higher price. So no different than what we looked at last week, that we're going to go and test those highs. Again, test or take them out, continue to move higher, like we looked at inside the NQ. The Dow right now right up against resistance. I mean, it's a couple of points just above it, but trading right into resistance. Closing above Stevie's red line today, is a very bullish message. When I say bullish from the standpoint we're going to see higher prices, certainly before we see lower prices out here. Now, if we go look at the indices, I won't use the whole show for that. We'll go take a look at some other things, but I don't see any specific questions out here. And I think this is valuable information to each of you, depending on the time frame it is that you're trading. Yeah, just take a look at the semiconductors out here. A sign that the market's going to make some kind of major top. We know there's many of them. There's just one that you need to know, really two, and those were the ones that I shared with everyone. If you're a TFNN subscriber, it's on your members page right now, 29-minute video that's worth watching for sure. Inside the semiconductor index, if the market were making a major top, these semis wouldn't be, screaming up towards all-time highs as they are right now. You're trading at 1066, a nice little gap to the upside. Gaps, what they mean, they are signs of strength out here. So it wants to go take out its highs well above Stevie's red line, 1051.93. So it wants higher price out there. Oh, that's interesting. That was a second chart. Okay, let me do this. I can delete that. The NASDAQ composite, let's not belabor that. Dow transports are trying to get over Stevie's red line. They're trading just underneath it, 89.62 is the number. We're at 89.50. So it's been tested. It's been rejected out there, but that would be a positive if it converts, an especially positive note if it could close above it, because its price oscillator, the very bottom panel of our screen, is still trading to the downside. Okay, enough about the indices out there. I think you get the gist. I don't want to do the overkill. It's already been overkill, so let's not overkill it anymore. Let's go take a look at Ford Motor Company. So as we know, in Ford, there's been a change, or I assume that been a change up at the top. The CEO, Mark Fields, he is my neighbor. So if we go take a look at, and he and Jane and the kids, everybody's going to be just fine. But what's interesting here is if you take a look at, this is a monthly chart. I want to show you on a monthly chart. If you were the CEO and you were just coming in when he did, I'm going to show you the time he came in, basically in July 2000. No, I got that off. July 2014. Here's where he came in, right here at the top. And if Mark were a technician like you are, and that I am, he would look at this chart and know he was coming in as CEO potentially at a very significant area of resistance. What do you know? I mean, when you take a look at this chart right here, again, it's a monthly chart. Let me do this. It's a monthly chart. Do you see where there is a significant resistance level just as Mark was coming in? Well, just simple lines out here. Just take a look at that level, that red line that we just put across the screen out here in about the $18 area. Look at that resistance zone. So he was coming in. Mullally was turning it over to Mark. Just Mullally knew that they had gotten to a resistance level. Mullally he's a big technician out here. He saw that monthly key reversal on January 1st, 2011. Now, he knows if price would have gotten above that, that would have been a beautiful thing out here. But that was not the case. And then you get a big old bearish engulfing candle out here, September 2014. So the word on the street is that Bill Ford has gone ahead and, in essence, replaced him, because the stock hasn't performed that well. And now they're using as benchmarks, I don't know, Tesla, the S&P 500, and all those are fine. But the reality is, I mean, if you're going to compare it against those equity. Look, by the way, where did the top of it, in essence, this, and we're not going to call it a consolidation, it's just simply a resistance zone. This goes back to 2002. So, hello, Bill. If you are such a smart guy, hopefully Bill is listening out here, or those that were buying into the fact that Mark was doing a bad job. This has nothing to do with regard to whether he's a neighbor or not. The stock hasn't done squat since 2002. Okay, and all that you have a resistance zone of sellers that like selling at the $1,800 area. We'll be right back. We're going to take a look at this chart just a little bit more. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we were talking about Ford here. So if we take a look at when Bill Jr. took over as CEO of Ford, you take that back to October of 2001. That would be about right there. That's the second red line, right around the 1877 area. He stayed until 2006. When Mullally moved over, but and look, I get the fact that CEOs are responsible for getting that stock price up there. And I posted in the den the real big issue here with regard to Ford is that, and I don't know, that probably wasn't approved by the board out here, was larger stock buybacks because that's really what was missing. In the case of Ford, they had plenty of cash flow. Free cash flow to be able to go ahead and buy back stock. So anyways, let's take a look at where Buddy Hackett, Jim Hackett, is taking over right now. And if we take a look at this horizontal level, he at least is taking over. So here's a guy that's probably going to get credit because the stock does what it does. Right now it's trading within this range out here, this band. You and I, we took a look at horizontal trading ranges. Well, this is another version of it between $9 and $18, and he's taken over the company around at 11. The price probably falls back into the $9 area, depending on volume or what have you. Finds a bottom, bounces back up towards the 18-ish area out here. But if you take a look at stock performance, in any event, all one really has to do, all any CEO should do, like you're going to take the job no matter what, but you need to know what you're up against with regard. See, there's nothing more fundamental than technical analysis when you're trying to understand what shareholders are doing. And that price level, when Mark took over, was very easy to spot. Look, this is going to be a significant resistance zone. Whatever you could do to engineer stock price getting above $18 would really be to your advantage. And it would have been. In this case here, it's not. Okay, so enough about Ford. But the cool thing is being able to go ahead and take a look technically what was going on, try to put together the piece of the story out here because, it's all how people frame things. And you and I, we're just framing what the stockholders do when we take a look at long-term charts out here. Okay, now let's go take a look at Goldilocks. Gold is up $8 out here. Japanese yen is doing basically nothing. It's pretty much flat. But that flatness, now it's a monthly chart that we have up on our screen. Let's go change this to a weekly time frame. Let's go do this out here. Let's turn on our boxes. And from a weekly time frame, it would appear, because last week was certainly a reversal signal inside the Japanese yen, that this will want to pull back into the 108.13, 108.87 level. Assuming that it does that, that should then be good for the force of gold and silver to continue to move higher. Now, if you take a look at silver, up 2.5% or 40 cents today. Here is its weekly profile. I know that they're blue out here, but they actually are weekly. What you're watching for in the case of silver is $17.39. $17.39. You're trading at $17.19. So you got about another 20 cents to go before this thing runs into resistance. Now, the reason why you want to pay attention to $17.39 is because if, in fact, and this, by the way, this is a brand new profile that formed today, this week, last night. Okay, so it's a brand new profile. You can see it has a bullish structure. Here, let me just go ahead and blow it up a bit. And I mean that in the kindest way when I say blow it up. You can see that the center of the box is at 1659. The bottom is at 1632. So this says this was a bullish structure. That tells us that silver's headed for 1739. Can I guarantee it? Pretty close. As close of a guarantee as I can give you. Not the personal guarantee kind, but a pretty darn good guarantee that silver is headed to 1739. Now, if silver can take out that profile level this week, a profile that just formed, well, prices are headed higher. You might say, oh, where would they head to? At least back to the prior swing in the 1858 level. I suspect that's what's going to happen. But first, we have to see how silver handles 1739. So it's got more to go to the upside. In the case of gold, up 1262 right now. It formed a brand new profile a few weeks ago. And this is also a bullish structure. What we ought to see gold do, now that it has cleared the center of its box, 1257, we ought to see price go ahead to 1297 out there. Yeah, 1297. That's where gold is headed to. So you got about another $35 higher in the price of gold. All of that should bode well for the mining equities. If you take a look at the GDX right now, it's at 2336. If we take a look at its weekly profiles out here, it's going to run to, as long as it can clear 2361, 2535. That's the number inside of the GDX. Again, that's a weekly number that you and I are taking a look at, and that's going to be a strong resistance level. If there were to be a close above that, 2535, well, then that would be extremely bullish out here, and that is the case of the GDX. So those are the metals for you, and the currency pair, the yen. Let's go take a look at light sweet crude. Let's go take a look at light sweet crude. Let's look at it on a number of different, with a number of different market profiles. And let's go take a look at the Stevie Etch-a-Stitch stitched together contract out here, the synthetic contract. So it's going to give us better profile data, specifically on the weekly chart. And so on a 60-minute chart here, you've got light sweet crude finding some resistance at 51.25. That is and you have 51.39 as the resistance zone on the weekly. So right now you're trading at 51.10. So watch the 51.39 level, because what's actually cool about these profiles here is the work to the downside, the back off to the downside over the course of the last few hours has taken place and has successfully held. Successfully held, meaning the price point of 50.98. And holding 50.98 was important because that was testing some support levels, the bottom of its 60-minute box out here. So now watch the upper level, 51.39. If you trade above that, well, you're headed higher. How much higher? That's a great question. Now, shoot. Who knows? I would have to say you're just headed back to the 57-ish type area out here, because this thing has really been trading somewhat sideways-ish, and the top of that sideways-ish is around $57. That's what I would target inside of light sweet crude if it can get above that, 51.39. Those are the numbers I would be looking at for light sweet crude, Texas tea. Okay, let's go take a look at some of the, what do you want to look at? What do you want to look at out here? Maybe an individual equity or two. Let's go with AutoZone. Let's go with something headed south out here. AZO is a ticker symbol on 1 3/10% out here. Let's go see if this is pulling back in any support area. AutoZone. Below a swing point, so it's breaking swing points. This is a weekly chart, by the way, that we're looking at out here. So it's breaking weekly swing points. Right now, it's the February 8th swing point area. Let's put this on a daily time frame. See if there is any kind of market profile information that pops out. And the answer is 664 Well, let me give you the exact number. 663.72. 66372. Brand new profile formed on Friday. You get below that, then this puppy wants to continue heading south. How far south? Well, you get below that, you have to start targeting $570 or so. That is ticker symbol AZO. Not looking too good for its stock chart. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we got KJF writes in and wants to go take a look at Alibaba. BABA is the ticker symbol. Nice trade. By the way, I won't give you the numbers that he's in at and looking at. A specific question, though, is will it make it to 137? So congrats on the trade. It's traded at 124 right now. Now, if we take a look at a couple different time frames for him, as well as what in essence took place. Now, if we take a look at last week, first, Alibaba's previous high took place in November 2014, shortly after it really came out of the IPO gates, a few months after it, 6-7 months after it. And that high, by the way, was $120 even Steven. Big volume up there, by the way, 293 million shares from a weekly standpoint. You can see it closed above it last week. Lighter volume, 107 million shares. And yesterday, but however, if we forget about that swing point, it really picked up some steam last week, as you can see. So it's really pushing higher, not into anything other than that old resistance over on the left-hand side out there. It's something to be aware of. It did pass a B point many weeks ago with lighter volume. And I'm referring to this lightning bolt pattern here that gives a price projection. John is looking for 137. So, John, I'm assuming that what you're doing is you're using this A to B equals CD for the most part. You'd like to have seen the week that began September 26th that had 96 million shares. You'd love to have seen that taken out with volume. We didn't, but price did pull back last week and moved higher with 100 and, what did I say, 107? I think 107 million. So, that's not too shabby. Can it get to 137? I don't see any reason why it can't. In fact, what last week did, if we look at the weekly chart on this perspective, we add Stevie's red line to it, you're going to see that all price has been doing is coming back, testing, rejecting, and moving higher out here. That's a positive. I'm going to pull open the price oscillator. I'm going to try to. What the heck did I just do there? I don't even know. That was weird. Here's the price oscillator. No, that's not the price oscillator. I guess I don't have it on this chart out here. But I can do it this way. I've always got a way. Always have a way, right? You got to have a backup plan out here. All I got to do is just turn this on the weekly, apply, and here is when you moved above zero where my cursor is at. So you've got a rising price oscillator on a weekly basis. Only if we were to close this week below 117 would there be any kind of a problem out there. Are still in the profit. So it does look like to me that this wants to move up into that 137 area. Now, daily-wise, let's go see what kind of sailing you've got out here daily-wise. You're above profile, so that's good. You've got this little shooting star. This happened on Friday out here. So there was a gap to the upside, and it turned out to be a shooting star. So which one was it? It was 21 million shares on the move to the upside out here. At this stage, John, all you'd really like to see is for price to close above 126.40. It's just a potential resistance out here, but it does look good. Looks good to me. So congrats on the trade. That was BABA Alibaba. Now let's go take a look at some stocks here that are also moving to the upside. We looked at AutoZone earlier, and thanks, by the way, for sending in that email. Let's go take a look at Intuitive Surgical. So Intuitive Surgical up pretty big. Well, it's been up big ever since the December timeframe. It's gone from 610, and you're trading at nearly $900 right now. So that is a heck of a move. Again, pull this back longer term. We're going to see we're at all-time highs out here. We gave a price target last week. I believe we looked at it because we saw that price was moving into its D point, A to B equals CD, doing it with a wide-ranging bar, doing it with pretty decent volume, 7 million shares out there. And the suggestion was price was not going to stop there. Only a 48% retracement was another signal that this wanted to do one of those more than one-to-one A to B equals CDs, which happened 40% of the time. So the price target right now, the next price target, $995.22. Above that, with no bears showing up, $11.71. That is Intuitive Surgical Brain Salad Surgery, brought to you by Emerson Lake and Palmer. Steve Rhodes will be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.